In this video, we're going to talk about the smartest way to invest in cryptocurrencies. Now, obviously, crypto is all the hype right now because you could make a ton of money. But what you got to remember too is that you could lose a lot of money also. It's a double-edged sword. And that's how it basically is with any investing opportunity. If a certain investment has a lot of volatility, that means it could go up really fast, but it could go down really fast too. Now, obviously, that doesn't mean it's a bad investment because, like I said, there's a lot of money to be made. But it means that you got to be smart about how you play it or how you invest in it, and that's why we're making this video, to help you out with that. And once again, when it comes to investing, there's a lot of different ways to do it. So if you think about the stock market, how many different stock market strategies are there? There's value investing like Warren Buffett, there's global macro like Ray Dalio, there's day traders, there's scalpers, there's high frequency trading. Basically, there's a million different ways to make money, and none of them are wrong. Insider trading, maybe that's wrong. Depends who you ask though. But because there's so many ways, again, that could be a good thing and a bad thing. It's a bad thing if you get overwhelmed and confused and you don't know which strategy to use, but it's a good thing because you can basically build whatever strategy fits your personality and, of course, your preferences. So in reality, the smartest way to invest in crypto, which is just like the stock market, is whatever way fits with your preferences and your goals. Now, like I said, there's no wrong way to invest in stocks or crypto, but what would be wrong is choosing a strategy that doesn't fit with your personality, preferences, and goals. So for example, me, in the stock market, I'm a momentum trader, meaning I like jumping on the stocks that are going highest the fastest. That's how I do it. And that fits with my personality and my goals. But if I was going to try and do value investing like Warren Buffett, that would be terrible. It would never work out for me. I would definitely lose money because, like I said, I do great with my momentum strategy. So same thing when it comes to crypto. If you're not doing what fits with your personality and goals, that's when you're going to lose money. So in order to invest in crypto in a smart way, then you need to ask yourself a few questions. First question is, why do you even want to invest in cryptocurrencies in the first place? And this is super important in investing, the why. And I know it sounds stupid. It's like, why do you invest? To make money, of course, right? But no, that's actually not the reason why a lot of people invest, regardless of what they say. For example, a lot of people, when they invest in the stock market, crypto, whatever it is, they want to make money. Sure, everyone does. But more than that, they want to prove that they're smart. They want to say, hey, look at this great investment I got in and look how amazing it did. And now he can brag to all his friends. So investing becomes more of an ego trip than an actual practice of making money. And what you got to realize is that those two things are very different and they're going to lead you down different paths. And the ego one, it's not a good path. You never want to use investing to prove something to someone. It's just stupid. Another reason someone might jump into investing, especially in crypto, is because they're bored and they want to gamble. Now, I'll tell you right now, there is nothing wrong with gambling in the crypto markets or the stock market. And I know a lot of people will say it's wrong, but honestly, it's not. You do what you want to do with your money. You can go to a casino, right? Well, a casino at home, that's what some of these markets feel like, especially crypto, when again, it's so volatile. It'll be up 10% one day, down 20% the next. It's exciting. It's fun. Feel free to gamble. But also, don't confuse that gambling with investing, because that's when you get in trouble. Because if you're gambling, what do? You don't put your life savings on the line. You take a bit of money that you know you're about to lose. But if you're trying to gamble and you're calling it investing, that's when you put too much money on the line and you start losing big. And then you're in trouble. So again, it's going back to, why do you want to be in crypto? And when it comes to crypto, the biggest reason I hear from most people of why they want to get in is because of FOMO, the fear of missing out. Because, you know, you'll be on Twitter or Reddit and you'll see all these people making all this money in crypto, and you start to think, well, what am I doing? I need to make that money too. I need to get in crypto as well. So you start to feel that pressure because you feel like you're missing out and you're doing something wrong. Well, I'll tell you right now, you aren't doing something wrong. You actually don't need to invest in crypto. If you're just investing in stocks right now, you'll be completely fine. I promise. You can still be super successful. It's just like before crypto, they would say, oh, you're in the stock market? Well, you need to get into real estate too. If you're not in real estate, you're missing out on all these gains. You're not diversified, blah, blah, blah. That's really just BS. You don't need to be in real estate. You could have just been in stocks and done great. I just focus on stocks primarily. I do great. Entire hedge funds just focus on stocks. They're doing really well. So if that's your motivation here, that you're feeling FOMO, I'm going to tell you just to back up a little bit. Now, all these reasons that we just discussed about the why, you can tell they're mostly emotional reasons. And that's why I bring them up, because there's no way you're going to do smart investing in crypto when you're feeling all emotional and when your drivers are wrong. So that's the first thing you want to ask yourself. And if you are doing it because of emotion, then you need to stop. Just cut it off. Not saying don't invest in crypto, but reevaluate what's the real reason. So, okay, if we move past these emotional reasons, what do we get to? Logical reasons. So one of the biggest ones is diversification, where you think, okay, I can do great in stocks, but I do want to diversify a little bit more. So I am already in real estate. I have some gold, and now crypto seems to be its own asset class. So why don't I put some money there? Okay, if you come to that conclusion logically and not emotionally, let's do it. So now the question becomes, how much should I diversify into crypto? Well, again, this depends on your preference and goals. So I can give you an example of me. So me personally, when I look at the crypto space, I think an allocation of 5 to 10% of my total net worth would be good for diversification. Now, I already know some people are thinking, hey, that's way too little. And others are thinking that, hey, that's way too much. But the way I came to that number, and for me, it's more like 5% instead of 10, is, hey, if I'm to lose all of this, I'm okay with that. I'm okay risking 5% of my net worth. And again, that number is going to change based off your own preference. And here's the other thing. When we're talking about diversification and investing in crypto, I'm talking about real long-term investing, like buy and hold. So if I'm going to buy into these cryptos and hold it, I know I'm going to have to deal with a lot of volatility, right? So much volatility and risk that I may in fact lose all of it. And I keep talking about the potential of the investments going to zero and losing all of it, right? And the reason why is because even though there's a good probability that cryptos are here to stay, there's also one major flaw with them that adds all this risk, which is the main factor that makes you think about potentially losing it all. And we'll talk about that more later on this video. But if you're looking for diversification, a good way to do it is a small percentage of your net worth and put it into a few cryptocurrencies and buy and hold. But of course, the next question is which cryptocurrencies to actually invest in, because there are so many. And again, you could debate all day about which ones are the best and which are going to be the tokens of the future. But in my opinion, your safest bet is to invest in the ones that are the biggest. So I'm talking about Bitcoin and Ethereum. Now, again, you can argue that, hey, Bitcoin won't be around because this coin is going to be better. Same with Ethereum. But the reason I say I would invest in those two is because those two have actual institutional sponsorship. So when you think back to 2017, when this whole bubble was happening with the cryptos, you didn't actually know which ones were going to survive. And then we went through that bust, and now we're here, right? In 2021, which is when I'm recording this video. And at this point, we've kind of seen which ones came back. And in our case, the biggest ones are Bitcoin and Ethereum. And those are the two that have gotten institutional sponsorship, meaning there are big companies that have gotten into Bitcoin. There are big funds that are investing in Bitcoin. And I would say Bitcoin is even bigger than Ethereum, but Ethereum is the close second. So when you have actual major institutions investing in something, and it gives it a higher probability of surviving, and institutions investing is a good signal because they usually have to play it pretty safe. They're not taking super risky bets. So you wouldn't see an institution investing in penny stocks or meme tokens. They're only allowed to invest in things that are going to stick around. And once all this huge corporate money gets into something, they're also going to fight tooth and nail to keep it alive because they have a vested interest. So if you really want to simplify it, focus on those two big ones. And also, if you're looking at this from an investment standpoint, the smartest way to diversify, you're not going to be playing with the tons of other coins that are coming and going every day. Like all the dog coins, there's so many of them. Meme coins left and right. There are also more legitimate coins, but there's a ton of them. And again, it gets confusing. If you're just looking at diversification for 5% of your net worth, stick to the big ones, the most popular ones, the ones that have that backing. Simplify it for yourself. In investing, it always pays to simplify. So you should take that same mentality towards crypto. Now, if you don't want to be a long-term investor who's just looking for diversification and you're more interested in speculating or trading, well, then that's a completely different story. Because if you're serious about that, about getting into that game, you really need to dive in. Because here's the thing, when it comes to investing, there's no amateur leagues. Whether it's stocks, crypto, or anything, you're immediately going up against the pros. So you got to understand, if you're going to try and trade cryptocurrencies, you are going to be playing against very, very good people. Which is why I would only suggest you do this if you're a more advanced trader. And again, this doesn't apply to the people who just want to gamble and have some fun. Like I said, there's no problem with that as long as you realize what you're doing and you tell yourself, hey, I am gambling. I'm not investing or trading. This is for fun. Good. No problem with that. But again, if you're trying to get serious in this crypto space, then the rabbit hole is very deep. So my co-founder at MacroOps, which is our global macro research and consulting firm, his name is Tyler. So Tyler is a professional trader. He's one of the best. And he went deep into the crypto rabbit hole. And basically the way he's making so much money is basically by making money in the difference between old finance and new finance. So if you're familiar with DeFi, which is decentralized finance, it's what all cryptocurrencies are about. It's all on the blockchain. There's no intermediaries like banks. So it's completely different from old finance. And in this transitional period that we're going through, there's a lot of inefficiencies. And as a trader, what do you do in the market? You're finding those inefficiencies and exploiting them. Now, in an old market like the stock market, it's harder to find these things. But in a new Wild West market like the crypto market, it's a little bit easier. But there's another problem that comes with the crypto market right now. It's moving so fast, like at an exhausting pace. So Tyler is a pro, right? And the way he's making money is by staying a few steps ahead of everyone else. And that means understanding all the changes that are coming. And like I said, they're coming very, very fast. fast right now. The innovation is crazy. So he's able to stay ahead of each trend. And when he does stay ahead of it, it's easy money. But it's difficult to actually be in that position. Like for him, this last year has been crazy and he's made a lot of money, but he's also very tired. The profit keeps him going, but it's not easy. So one of the interesting things is like crypto lending that he got into. And the rates you're getting are just crazy, especially when you compare it to our normal banking system. If you're into crypto lending, you're also taking on a lot of risk. So it's a lot of analyzing, okay, what's the real risk here versus the reward? And it's tougher because these are brand new things. Same thing when he's trading crypto, he's not using your standard brokerages because the fees are too high. He has to use more risky international brokerages, but the fees are lower so that you can actually afford trading these things. And then again, the risk is higher because those brokerages could go down. So if you're getting into that space of trading, you got to understand, again, it's a completely different game where you need to be constantly analyzing risk versus reward. You got to have your risk control in place. You got to know how much money to put into each one of these opportunities because again, brand new, risky, it could go to zero. And on top of that, you need a strong commitment to it because it's moving so fast and you got to stay ahead. Tyler spends all day doing this stuff. And it is an absolute smart way to make money, but don't disregard how much work it takes. Playing on your Robinhood app with a few crypto coins, that's not the same of what a professional is doing to make real money, to do it in the smartest way possible. So just be honest with yourself with the commitment that that takes. So for me, example, I'm not going to do all that. I don't have the time or the interest, which is why I go back to what we were saying before about that diversification and that buy and hold in the top two biggest, Ethereum and Bitcoin. That would fit my goals better and my personality. So again, the smartest way to invest in crypto is based off your goals and personality. If you do something that doesn't fit with what you actually want, you're going to get in trouble. And remember what we said in the beginning of this video, that even though cryptos are likely here to stay, there's still a huge flaw with them that could be fatal to the entire space. And by fatal, I mean they could all disappear. So there is still a lot more risk with cryptos versus something like the stock market. Stocks aren't going anywhere. Crypto could be going somewhere. And if you're investing in them, you really need to understand this risk. And that's why we made a whole video about it right here. We talk about that fatal cryptocurrency problem you need to know about. So click this video right here and we'll talk about it there.